It's time to shift how you look at the stock market and AI. And here's why. In 2025, the S&P 500 posted a return of 17.9% for the year. The lion's share of these gains were with the big tech and artificial intelligence companies. But will it continue? Well, so far in 2026, these companies have posted promising gains, but valuation concerns remain ever present. So instead of just investing in AI stocks, it's time to actually start using AI as the powerful research tool it is to find winning stocks in all sectors, not just tech. I developed a market-beating AI strategy for WallStreetZen that finds high-quality stocks using AI. And today I'm sharing 2 top stock picks from our AI Factor portfolio with you. I don't want to keep you in suspense, so I'll get right to those stocks, then I'll share how I found them and how you can use the same system to find more stocks like these yourself. But first, who am I and why should we even listen to what I have to say? Well, my name is Steve Reitmeister. I've been investing for over 4 years. I was previously the editor-in-chief of Zacks.com, where I educated millions of investors. Now I'm a partner at WallStreetZen.com, where I developed a quant rating system to help investors like yourself find the best stocks fast without all the noise and nonsense. By the way, I'm new to YouTube, so if you like this video, please hit that like button down below. It helps me know what types of videos are most helpful and interesting to you. Now on to those top 2 stock picks. First up, we have BRP Incorporated with a symbol of DOO. This is a Canadian headquartered Powersports vehicle company with a strong global presence. If you're into Powersports, then no doubt you will recognize some of the brands in their portfolio like Sea-Doo watercraft, Ski-Doo snowmobiles, Can-Am off-road and on-road vehicles, and Alumacraft boats. Even if you don't know them by name, it's important to appreciate that BRP is an innovation leader with truly iconic brands. Further, the company has strong growth prospects and broad international demand, and these things have analysts very bullish on the stock. But here's what really interests me. The fundamentals for BRP are truly exceptional. Right now, DO ranks in the top 1% of the 4,600 stocks that we track in our Zen rating system. In fact, it actually ranks 9th overall, putting it amongst the most attractive stocks in our universe. It also is a number 1 rated stock in the recreational vehicles industry, which has a favorable A rating according to our industry rank. So in BRP, we are talking about the top rated stock in a top rated industry, a very good start to any investment conversation. By the way, if you want to learn more about the Zen ratings, I dropped a link in the description below. Back to BRP. It also has strong Wall Street backing where multiple analysts recently upgraded their price targets. One analyst we track from RBC Capital maintains a 131 price target, suggesting 79% upside potential in the coming year. In related news, DO is in the top 1% of stocks we track for sentiment, putting it in the 99th percentile. This means the smart money is already on board the stock. The stock also ranks in the top 6% for growth and top 10% for momentum. The company has enjoyed expanding profit margins that result in consistent dividend growth. Since this video is about the top stocks found by using AI, let's look at what our proprietary AI Factor says about BRP. At the heart of our AI Factor is a neural network model trained on 20 years of historical fundamental and technical data. It analyzes patterns and relationships that would be impossible for humans to detect. This gives you a more comprehensive and nuanced view of a stock's future potential. That's a long way of saying if the AI Factor sifts through mountains of data and still likes a stock, it's probably worth paying serious attention to. According to this model, BRP Incorporated is in the top 4% of stocks we track for this coveted AI Factor rating. So that's the good stuff about BRP, but no stock is without some risk. The first risk to note for BRP is that it operates in a cyclical industry that is highly sensitive to consumer discretionary spending. That makes it quite vulnerable to during economic downturns. Also, the recreational vehicle industry can face headwinds from higher interest rates, making financing more expensive for customers. Plus, you have supply chain costs or shifts in consumer spending patterns. And finally, BRP's business is seasonal, with demand naturally fluctuating throughout the year based upon weather and recreation patterns. But overall, the analyst sentiment, impressive growth prospects, and the fact that our advanced AI algorithm singles it out as a high potential play makes DO a stock worth watching. Now on to stock number 2, Betterware de Mexico with the symbol of BWMX. This nearly 600 million market cap company operates a Tupperware-style direct sales model in Mexico and Central America, selling household products through independent distributors. Don't worry, I'm not going all multi-level marketing on you here, but the fact is this is a model that thrives in Latin American markets where traditional retail infrastructure is underdeveloped and the middle class is growing. Betterware is expanding its distributor network while modernizing its platform with technology. This combines a personal sales approach with digital efficiency for scalable growth. This is an A-rated stock overall, meaning it's a strong buy. The threshold to be labeled as an A-rated stock is to be in the top 5% of the 4,600 we track. In this case, this is not just top 5%, not even top 1%. It is actually the second highest ranked stock of all 4,600 reviewed by our model. That's about as good as it gets. Just like with the first stock, we have a compelling mix of growth and value. In these vital areas, it scores in the top 17% for growth and top 9% for value. Also has an average target price of 21.67 cents from Wall Street analysts. This implies over 30% potential upside, which I actually think is on the light side. Not surprisingly, the stock also ranks in the top 10% of stocks we track for sentiment. Strong sentiment scores like this means that the smart money is already climbing on board Betterware. That is often a very loud whisper to check out the stock right now. In fact, most of Betterware's component grades ratings are pretty impressive. We are in the top 5% for financials and top 10% for momentum. And finally, getting back to that AI factor, the stock ranks in the 97th percentile for our AI factor, meaning it's in the top 3% for stocks likely to be timely outperformers. By the way, I use the same Zen rating system I've been talking about to find 3 more high potential stocks I believe could double in the next year. You can get those 3 stocks for free, either by scanning the QR code or by clicking the link in the description below. What are the risks with Betterware? First, the company's model depends on recruiting or retaining distributors, which can be volatile and hard to scale. Also, the company is heavily concentrated in Mexico, exposing it to regional economic slowdowns, peso fluctuations, and political instability. And of course, the direct sales industry faces regulatory scrutiny and consumer skepticism. But overall, Betterware is pretty darn appealing right now, particularly since it's the second highest ranked stock overall, with particular strength for value, growth, and our AI factor. Mark your calendar for its next earnings call on February 19th. It could provide additional fuel to this fire. So those are the 2 stocks. What do you think? Please leave a comment below and let me know if you're interested in either of these 2 tickers. I'm generally interested in what you have to say. Now, if you're still with me, I want to give you a little bit more background on the paradigm shift taking place from just investing in AI stocks to actually leveraging AI to find the best stocks. As time goes on, using AI to select stocks will turn from what it is now, a definite edge, into a standard part of most every investor's toolkit. Right now, it's most certainly an advantage. Tomorrow, those who fail to adapt will be left behind. The conclusion is simple. Your best course of action is to integrate these AI capabilities into your investing approach as soon as possible. But it's hard to know where to start given so many alternatives. That's why it's so important to find a proven system to find stocks using AI. Here's how I found the stocks I just talked about using the AI factor strategy from our Zen strategy service. The Zen rating system I mentioned earlier is at the heart of these strategies. This quant ratings model uses 115 unique factors to evaluate roughly 4,600 stocks on a daily basis. The insights from those 115 factors is boiled down to a single letter grade between A and F. Just like school, you want those higher grades to enjoy higher performance. Plus, we provide 7 additional component grades where you can appreciate how the stock stacks up in other important areas like growth, value, momentum, safety, financials, sentiment, and our proprietary AI factor. A Zen rating of A is equivalent to a strong buy recommendation and is only handed out to the top 5% of stocks. That's a great start, but top 5% does still leave roughly 230 equities to consider on any given day. Gladly, you can greatly narrow down that search by turning to our Zen strategy service. This includes 11 exclusive portfolios, each consisting of just 7 rigorously selected stocks. The picks I shared today are from the AI Factor portfolio. As I mentioned earlier, this AI Factor harnesses a neural network trained on 2 decades of market data to identify likely outperformers. Better yet, since the AI model is constantly receiving updates, it's only going to get smarter and better as time goes on. The AI rating is at the core of our top-performing AI Factor strategy, which has produced an all-time average return of 47.7% a year. The 2 stocks highlighted above are just a fraction of what you get from our proven AI Factor stock strategy. However, maybe you want more than just AI-derived insights. So we invite you to check out all 11 of our market-beating strategies, including ones focused on growth, value, momentum, income, small cap stocks, and more. Check out Zen Strategies now by scanning the QR code or clicking the link in the description below. If you want more insights about AI and its impact on the stock market, I highly recommend you check out my video about Vanguard's recent report about the future of AI in the stock market and how to position your portfolio for the future. In it, I take a deep dive into their report and share the investment classes I believe could surge in the months and years ahead.